Hey, it's Tim. It's about 8:45 on a quiet Martin Luther King holiday, so I hope everybody is enjoying the day and paying their respects. We have China trading down dramatically overnight, and most of that is a response to the RRR hike that happened actually after their market closed on Friday. Although we tended to shrug it off here in the States, and a lot of EMs shrugged it off, there are some folks that think that the tools they're using on monetary policy are a little bit more on the blunt instrument side than something that's actually going to be fine-tuning the economy. But as we look at emerging across the board, with the exception of Russia, which is getting a nice boost on the BP Rosneft deal, and again, the backdrop for that is people feel this is a re-rating event for Russia. This is a place where if the Russian government is ultimately entertaining Western oil majors inside of Russia, historically that's not been a particularly warm and inviting environment, and also with a big slew of privatizations coming down the pike in Russia in 2011. They're going to be selling big stakes in Sberbank, big stakes in VTB, more in Rosneft. They will try to be setting a tone for an improved corporate governance and transparency backdrop. Whether that actually comes to play or not, I think people are continuing to pile on the Russia bandwagon. J.P. Morgan with an upgrade on Russia this morning, so I think you can continue to see the flavor coming through. In Turkey, actually, stocks are under a bit of pressure. There's a fair amount of selling of some of the banks, but it's rate cut hopes that are gradually diminishing ahead of a big meeting on Thursday, so keep an eye on that. You've got a number of industrial companies reporting and resource companies reporting in EM this week, so keep an eye on, especially with some of the steel companies, what they say about the higher coke and coal prices, what it means for their business. As we like to say, the best cure for higher prices is higher prices, and that may be what's going to bring down coal prices if the steel sector just cannot afford to take down a number of these huge moves up in coke and coal prices. So quiet holiday flows here. I do think you've got people on the flow side looking at where developed versus emerging is as one-sided a trade in favor of emerging growth, and that's an interesting crossroads or an interesting concept for emerging, which always and universally has been accepted to be the place where you want to go to get the growth, even if there is higher volatility and susceptibility to developed market pullbacks. Templeton and a couple of the big mutual fund houses have actually reduced emerging market weightings on the back of the strength and the outlook they have for developed. So a little turnaround. Talk to you soon.